Thank you so much for joining Conversations with Cohen. I'm your host, Greg Cohen, Office Leasing Specialist at Cressa. And this podcast and video are for office tenants to help educate them about all things regarding their office, from leasing to architecture and everything in between. Whether you're an entrepreneur thinking about your first office or a director of real estate managing a large real estate portfolio, this podcast is for you. I've got a really interesting show for you today. My guest is Ann Kayman, CEO of New York Grant Company. I recently moved a tenant to the financial district from Midtown, which resulted in a $100,000 rent credit over the next 5 years, as well as an electricity credit over $25,000. With companies watching their dollars and cents now more than ever, I thought this was a great opportunity to educate businesses about incentives that exist for relocation. Based upon my experience, it seems that a lot of tenants don't even know this exists. So who better to speak with than one of the experts to help us understand what may be available going forward as we think about future office space. Before we get started, and just as a reminder, if you want to reach me, I'm at Greg Cohen NYC on Instagram. And if you're new to this video series or podcast, hit the subscribe button below so you never miss a future episode. Ann, welcome to the show.
Thanks so much, Greg. Really appreciate it.
Perhaps we can start with you introducing yourself to the audience.
Oh, really? Yes. Okay. No problem. Thank you. Thank you again. My name is Ann Kayman. I'm CEO and founder of the New York Grant Company. It's a firm that I founded 18 years ago now, coming out of the experience of being chief of business development for the city of New York with the New York City Economic Development Corporation, a job which was a fabulous job I held back in the, late 90s, and then for a year after 9/11, whereby the whole job was to help businesses primarily and not-for-profits and communities get help from the government, in that case the city government, to expand, to enter into the market, to invest, to hire, and all that good stuff. And then that came on the heels of being a lawyer, God help me, in New York City since 1985. So I've spanned my now all too long career, mostly in the field of economic development, because after my gig with the city, I realized very quickly that, actually during my gig with the city, that there was a lot of misinformation or lack of information, as you nailed it at the outset of your podcast here. People just aren't aware that incentives actually exist for private businesses to come into New York City, of all places. You don't think of that being available, that there are no grants or giveaways. If anything, businesses are tax, and rents are generally high, costs are generally high. So it's a rather unexpected phenomenon that businesses can actually realize bottom line benefits if they just know where to look. And also, even in the best of circumstances, the city and the state, they don't coordinate mostly. They're arguing. Agencies within the city or state don't generally coordinate with each other. For the most part, the federal government doesn't talk to the states about the stuff for the most part. So it's very disaggregated, and therefore the need was apparent to me and still remains, thank goodness, so after all these years. Well, I guess that's for better or for worse. At least it gives us a job. But the need for a Sherpa guide to help understand what's available and navigate through it and take advantage of it and get through all the compliance and the reporting and the other steps required to fully take advantage of programs that are out there, which are many. And New York, surprisingly, again, is very, very robust in this regard. The programs that exist in New York are similar to many that are across the country. each jurisdiction in the country, and in fact in the world, city, state, county, local, what have you, have various economic incentive programs. They're very similar in a lot of cases because government has certain tools which it can use to help provide stimulus or incentive to the public. And so, New Jersey will compete with New York, and New York will compete with California, and on and on. So what we have in New York is a very robust program, relatively speaking, but it is something that you could also see in other parts of the country if you're looking in other markets, just to flag that.
If I may, Ann, so just to simplify it, just to start for those who are the uninitiated, there are programs that are available from local, state governments where some sort of financial benefit will be reaped by making a decision to relocate to a certain area. Is that right?
Correct, in a nutshell. And just to expand on that point a bit, the programs that exist could be, and you think about your basic civics course, as we used to call it, right? Political science. You've got the federal government. It has economic programs, grants, and other incentives like R&D tax credits, for example, or energy efficient buildings tax credits, for example. The state has its own level of programs. The city governments around, let's say New York State, have their own programs, and counties as well have their programs. In New York, we have a series of what we call industrial development agencies, IDAs. These are county level organizations to provide additional benefits, and they're all really, with maybe very few exceptions, additive. They add to each other. They don't conflict. They're actually, you can bundle them all together. And because of the way funding works on the government side, you can have any combination of things like outright cash grants. That's money you don't have to ever give back. Wow, that's like that's the holy grail of my profession. You also have tax breaks of various kinds. You could eliminate taxes. You could reduce taxes. You can defer taxes. I always like to say to my audiences, that which is taxed can be untaxed. And that's one of the best things that New York can do for the business community, which is to alleviate, relieve, defer, in any way, get rid of tax burdens that businesses face. And that could be a business income tax, sales tax, real estate tax, any kind of tax can be effectively untaxed. In addition, government has the ability to give loans or maybe loan guarantees to banks so that they free up credit. That's a whole other area of available funding. Let's see what else. Oh, government can also partner with utility companies, and this is done in New York all the time with such utilities like Con Ed or PSE&G or National Grid, in order to reduce the cost of electricity or gas or both, so that users like your client that you and I just work with can get a break on what are otherwise pretty high utility costs in the state of New York. By working with the utilities, government offers incentives in the form of discounts on power. In addition, the utilities offer actual grants or rebates to help users become more energy efficient or independent of the grid. So there are grants, for example, from the state, or from the utilities, or both, to help encourage businesses use, say, solar power or wind turbines or other means to reduce the burden of users on the grid and reduce our carbon footprint. It's a fabulous landscape, frankly. and it's really rich.
I can hear my audience saying now, but those things, those things never will apply to my business, right? I'm sure I'm sure there are tons of asterisks that apply to these types of incentive programs and bonuses and rebates. This is not going to apply to my company. Why should I even explore this?
Well, I just have one thing to say, as Johnny Carson would say, wrong. No, I seriously, and I'm not here to, raise expectations beyond what's realistic. That's just not in my DNA. It's not what I'm here on this planet to do. I try to look at this stuff very realistically and to steer clients to those things that are actually going to work for them, as opposed to going down, rabbit holes of government bureaucracy chasing after stuff that's never going to happen. That's just not, doesn't make any sense. So, even for small businesses, let's just do let's say a hypothetical. Say a 10-person company, and this is based on, real life experience that I've had many times over these past 18 years. Let's say a 10-person company comes into New York for the very first time and leases a small office on Wall Street. And let's say they're from, I don't know, pick somewhere. California.
Des Moines, Iowa.
Des Moines, Iowa. Perfect. So, and let's just say it's a regular office tenant. Maybe it's a law firm or a marketing firm or consulting company. And it takes a direct lease for a Wall Street office for, let's see, if it's 20 people, how many square feet would that be? You think,
let's
Greg?
say 5,000 square feet.
Okay, fair enough. And let's say it's a direct lease, not a sublease, not an office share or anything like that. Direct lease for at least 5 years. Now that's a pretty short term. You probably are the same. I'm always trying to counsel clients to take a longer term, just because time goes by so quickly, and you like to lock tenants into a good deal when they have it. You always, rents are always going to go. But let's just say, for argument's sake,
I would really say, just for that, it really depends. And I know you meant that. It really depends on the trajectory and the growth of their business and what their profile is like. So
okay, let's say in our hypothetical, the Des Moines, Iowa company with 20 employees comes in with 5,000 square feet. They rent for 5 years and they take an option to renew. Okay, cool. In that case, Wall Street, if the building is pre-1975, which most of the office buildings, not all of them, along Wall Street are pre-1975, that client will get $50,000 in rent credits over the next 5 years. They could get 5 years or more of electricity discounts worth about a 15% savings of what they would otherwise have to pay in electricity costs, depending on the building and whether it's enrolled in this particular electricity savings. But most of the buildings on Wall Street are or have been. And they could possibly get, if they're planning to grow, if they're planning to increase their headcount, they could get job credits from the state of New York, but also because they're coming in from out of state to New York City for the first time, they could get $60,000 a year over the next 12 years, plus the year of relocation, in something called REAP credits. That's REAP. Government's full of acronyms. So REAP stands for Relocation Employment Assistance Program. It's one of the most valuable incentives that the city has had to offer for a long time. The program's been around since about the mid-90s. It's been renewed from time to time. It was recently renewed last year, so it doesn't expire for some time. $60,000 per year times 12 years plus the year of relocation.
Wow.
And the cool thing about the REAP is that it's on top of all that other stuff, first of all. Second of all, the credits are refundable in cash for the first 4 years plus the year of relocation. Thus, if the business tax liability to the city of New York as its business income is less than the amount of the credits, which in many cases is the truth because businesses come here, they're operating at a loss. You know, the accountants work very hard to take advantage of every credit, every deduction, every et cetera. And businesses are investing in themselves when they come into this market, most commonly. So if the credits exceed your tax liability to the city at the end of the tax year, the credits are refundable in cash.
Wow.
And that's for the first 4 years plus a year of relocation. That's called REAP. So you're looking at $60,000 in possible tax credits. That's based on a formula which roughly equals $3,000 per full-time employee per year. All right, so we said 20 people times 3. Now that's a cap, and the formula works according to actual weeks worked to take account of people coming in and going out in the middle of the year and that sort of thing. But for this hypothetical, we're going to say it's $60,000 a year, and that's realistic. Plus the $50,000 in rent credits, that would be $10,000 a year. So that's $70,000 plus the electricity. That you're looking at $75,000 a year for that small business to come to Wall Street.
Right.
Wow. And that's real stuff because, as mentioned, the tax credits are dollar for dollar offsets against taxes you would otherwise owe to the city. So that frees up cash to spend on other purposes for your business that you don't have to pay the City of New York Department of Finance. Plus, the credits are refundable in cash to the extent you don't have the tax liability. So that's even more cash in your pocket. And the rent credits are just that. So that's money that you would save, the money you save that you would otherwise be paying your landlord for your office rent, that the landlord is actually required to give to you as an offset of your rent every 6 months for the benefit period, which is a total of 5 years. And the electricity discounts, likewise, if they apply to you, are direct credits against your electricity bills from the landlord. So this is real money,
Yeah, massive. So would you say the majority of tenants know that these things exist and access them?
I would say no. The majority do not know. Although, over time, because of the work of people like yourself and myself and others, awareness has gotten better over the years. Landlords are more familiar with the programs, brokers, lawyers, accountants, whatnot. But by and large, especially for tenants moving in from somewhere outside of New York City, there's not an awareness of this, and government does not really promote the programs directly. They're just not in the business to do that.
Right.
They exist on the books. They're described on the internet. If you go to the city's websites or whatnot, although caution, a lot of times that published material, even if it's from an official source like the City of New York, is way out of date. So you need to be careful about that, just as a flag.
And if you qualify, you can access it. It's not like
Correct.
First come, first serve.
Correct. And the thing about New York's programs, which I find to be very, very good as a citizen, as a business owner, as a taxpayer, whatnot, is that most of the programs and the ones that we just talked about in New York are as of right, meaning, it's not automatic. It doesn't mean that. But if you put the right paperwork in on time, and if you qualify under the rules of the program, then you're in. You do not have to negotiate these benefits with anybody on the government side. Now, there may be questions about how to interpret, a lease clause or something like that, or there may be questions of interpretation that come up during your application process. But the bottom line is that you do not have to negotiate these benefits. They belong to you. They're statutory. They're on the books as long as you submit the right paperwork on time.
So let me ask you this. So this law firm from Des Moines, Iowa, is listening to this podcast, and they say, "Oh, great, sign me up." Where do they find the information to figure out if they can access these incentives?
Okay, well, since you and I are here in control of the button, so to speak, and to be shamelessly self-promotional, but this is the truth. They need to come to you as their broker in the first instance. You have enough working knowledge of these things to understand that, hey, wait a minute, there's probably something here for you, or at least we should look into this,
right?
And then if I get called in, I'll look into it. And the way I work, and I know the way you work too, and the way I work with most of the brokerage community around the city and always have is that we'll look at the situation, this case study, if you will, free of charge, no obligation, to assess, is there something really here for this tenant? If not, we'll just tell them and we'll go on our way. Because to the point I made earlier, it does not behoove any of us to waste time pursuing some sort of program that's not going to fit that situation.
Right.
So the best thing I can do as a professional, having done this with my team for 20 years, is look at the scenario, and we know these programs all inside out, upside down, and assess what's actually there. What is it going to take? Does this tenant have the ability to produce, the right paperwork on time to get into the program? Can we meet the criteria? And what is the level of benefit to the tenant at the end of the day? So, of course, tenants working on their own can go to New York City Economic Development Corporation, Empire State Development. These are the arms of the state and the city government that have websites that discuss programs that are available. New York City Department of Finance is one of the city departments that administers a lot of this stuff. And they have, forms and to some degree instructions and whatnot, descriptions on their websites. But again, buyer beware, because a lot of the information is maybe not up to date or not complete, or misses, the asterisk you mentioned at the outset of the program. But wait, that doesn't apply to subleases. Oh, why didn't you tell me that? So these are things that users and professionals need to be aware of.
Well, Ann, you beat me to the punch, because my next question was a good way to lead into it, which is if company X does it themselves, right? What are the things that you've seen going wrong, right? Because I would imagine with 20 years of experience, you've seen companies start it themselves and then bring you into the picture. So it's almost why not just start off with your help from the beginning? Help us understand. Help us understand what could go wrong, or why not do it myself, right?
Yes. So, as good as these programs are, and with most of them, as I mentioned, being as of right, in other words, you don't have to negotiate with anybody to get them. Although, let's put that also to the side, because we should come back to other programs that are negotiable, and they're very valuable. But putting that aside for the moment, there are a lot of landmines in this landscape of economic development programs. If you miss a deadline, forget about it. Forget about it. These are statutory deadlines. Nobody at the reviewing agencies has discretion to say, oh, it's okay. You had a good excuse. I'm late. It's, done. You're done and done. Or, you just mess up if putting in some kind of technical answer to a question as part of your package of applications and the supporting documentation. This is like doing your taxes. Or doing a loan application for a mortgage. You got to cross all the T's, dot all the I's. And if you miss box number, 12A on page 7, you could hold yourself up or get kicked out of whatever, just for a simple technical mistake, or maybe not so simple a mistake. Leases have to be made and drafted in accordance with the program rules. For example, the scenario on Wall Street involves something called the Lower Manhattan Commercial Revitalization Program, government acronym CRP. The CRP program, which has been around since the mid-90s, requires that the lease, in order to qualify for these rent credits we were talking about, that's $50,000 on the line for that tenant we discussed hypothetically, has to have a certain disclosure or a certain clause. It could be a rider to the lease, or it could be embedded in the lease. That is it's pretty benign, because it says essentially, tenant advises that it intends to pursue this program. Landlord is advised that the tenant is going to pursue this program, and pursuant to program rules, landlord must pass through to the tenant, blah, blah, blah. It's pretty basic. It's a disclosure, but absent that clause, you won't get accepted. Right. You don't qualify. Right. So these are the sorts of things, the deadlines, the qualifications, the paperwork requirements, the technical requirements that often trip up people. Because look, hey, it's not their business. It's not my client's business to navigate this stuff. That's what I do. I've been doing this for a long time, and I have to look up the rules all the time. My team and I spend, all day doing this stuff as a specialty, And if we have to dig in and ask for clarification and make sure that we're up to date on the latest rules and interpretations and whatnot, and make sure that everything goes in, perfectly. Imagine that a business trying to, get grounded here in this marketplace, that they're trying to navigate this. I would just be pulling out my hair. And also another landmine is the ongoing compliance. Just because you get a grant or a tax break or some incentive from the government, as we've been discussing, all the programs that we just discussed included, doesn't mean that that's the end of the line. So for the job credits we were talking about under the city's REAP program, the $60,000 a year that this tenant was going to get with its 20 employees, the process doesn't just stop with you're getting a piece of paper that says, congratulations, you're in the program. I mean, that's a good thing to have. But then every year you have to go in and resubmit paperwork, the right paperwork on time again, to get recertified that you're still entitled to receive these benefits. These things are running for a number of years, and therefore to maintain the benefits, to keep them going and to maximize them, you need to maintain reporting and compliance that as a business, you're entitled still to receive these benefits, that you still qualify. If you move out, then you shouldn't be getting these credits. So you have to validate that, verify that. And the government, especially in New York, they do a very good job of keeping track of that. And God forbid, if you don't, if you don't resubmit, recertify, you'll get bounced out, and that's it. You're done. So
snooze, you lose.
You snooze, you lose.
Any idea in aggregate the numbers of credits that you've been able to achieve over your time either in business or per year?
Like Carl Sagan, billions and billions. Oh, I don't know. Every once in a while, we try to quantify it. We know it's over $1 billion.
Wow.
Every business, almost by definition in New York, right? New York City especially, is unique. Businesses have unique needs, profiles, trajectories, etc., location situations, and whatnot. So the important thing is to take all that into account to navigate these programs. But to your initial question, the benefits are real. Just per this one scenario we identified, with small business coming in, first time, very small, for profit, ordinary lease, Wall Street. I mean, like, that's not, a tech company coming in, transforming a neighborhood or something like that. This is pretty, man on the street type of business, if you will.
Right.
So the benefits are real. They're there for businesses of all shapes and sizes, literally, for-profit, professional firms, financial services firms, tech firms, yes, restaurants, retail stores, hotels, developers, entertainment companies, media companies, publishing houses. They run the benefits are readily available to all kinds of businesses. Now, that being said, that's kind of a generalization. You have to look, because a lot of economic incentives are not so skewed to favor retail businesses or restaurants, or what they call personal service businesses like gyms or massage parlors.
So for people who are listening, how do they get in touch with you and your team to figure out if you can help them?
Sure. Thank you for asking. The best way to reach me is via email. I get a lot of crazy phone calls, people trying to sell me stuff, so I apologize in advance if anybody's trying to reach me by phone and can't get to me. So best way to reach me is by email, which is Ann, ANN, at nygrants, that's grants.com. Or if you email info@nygrants.com, that'll come to myself and my lovely president, who's worked with me for 12 years now, Marcia Paris. She's Marcia, MARSHA, at nygrants.com. And again, we're at 29 Broadway. We have a website, NYGrants. So you can find us.
And I'll be sure to link all of that information in the show notes. I want to thank you for taking the time to joining us today and helping educate a lot of people about incentives and money that really is there. It's there. It's low-hanging fruit in the sense that it's available. Just a lot of people don't know about it.
Yeah, and Greg, I know we're time constrained. We could spend hours on this, but there's a whole host of other programs that we didn't even discuss for businesses that are coming from the state and from the federal government and from the counties. So, maybe we'll pick up this conversation again sometime.
Wonderful. Well, thank you for joining Conversations with Cohen. I'm your host, Greg Cohen. This was Ann Kayman. And if you like this, or if you had any questions for Ann or myself, don't forget to hit the comment section below and leave a question or a comment or like us. And we'll see you next time on Conversations with Cohen. Thanks again, Ann.
Bye. Thank you.